Will Jamaica lead the next Caribbean oil boom? Welcome to episode 78.
Glad to be here. This update is as of June 6th, 2025.
And our source today is a really interesting piece from the Jamaica Observer. It digs into some pretty bold claims from one particular company.
That's right. We're looking at United Oil and Gas, usually called UOG.
And they're really pushing hard on exploring for oil offshore Jamaica. They've got the license for this huge area, right? The Walton-Morant block.
Exactly, just off the south coast of the island. It's a vast block.
And what really jumps out is their pitch. It's incredibly ambitious.
Yeah, they're not just, hinting at maybe finding something. They're drawing direct comparisons between Jamaica's potential and these massive game-changing discoveries. Think Guyana, think Namibia.
Wow, okay. Guyana and Namibia, those are the really big recent success stories in finding oil in new places, aren't they?
Absolutely, huge finds. And UOG is basically saying Jamaica could be next.
And they're actively looking for partners now, big industry players to come in.
That's the crucial step right now. They're in discussions, sharing data, trying to bring in major partners to fund and actually do the exploration. It definitely feels like they're positioning this as, potentially the next major global discovery zone.
Okay, let's dig into that comparison then. Guyana, Namibia. What does the CEO, Brian Larkin, actually mean when he calls Walton-Morant a world-class frontier opportunity and puts it in that league?
Well, I think he's really pointing to the sheer scale of the potential prize. What could be locked away offshore Jamaica? Take Guyana's Staybrook block. That was only discovered back in, 2015? Relatively recently.
Yeah, it feels like yesterday.
And it's just exploded. It's become one of the world's major new oil provinces incredibly quickly. Production is already around 600,000 barrels per day.
600,000 barrels a day. That's a lot of oil.
That's a massive amount.
Yeah.
And the estimates for total reserves there, just in Staybrook, are staggering. We're talking like 11 billion barrels.
11 billion. Okay.
So for a country like Guyana, finding that much oil isn't just, a nice economic boost. It's completely transformative.
Yeah. It changes everything.
Fundamentally.
Yeah.
Government revenues, infrastructure spending, social programs, its entire standing on the global energy map shifts.
So when UOG says another Guyana, they're suggesting that level of revolutionary impact could happen for Jamaica?
That's exactly the implication. It frames their ambition. They're not looking for a small find. They're swinging for the fences, aiming for something that could reshape Jamaica's economy, much like we've seen next door in Guyana over the last decade or so.
Right. That really puts their thinking into perspective. It's a huge target.
It is.
Okay, so let's talk numbers specific to Jamaica. What are they actually putting forward? There's a certified estimate, right?
Yes, from Gaffney Klein. They're a well-respected global energy consultancy. Their certified mean potential estimate for the Walton-Morant block is 2.4 billion barrels.
2.4 billion barrels. Okay, even just the certified number is pretty substantial.
It definitely gets your attention. But then, UOG's own internal estimates, they're even more optimistic.
Oh, really? How much higher?
They think the total potential resources across the whole block could be as high as 7 billion barrels.
11 billion. Okay, now that starts getting closer to that Guyana kind of scale we were talking about.
Exactly. And they've apparently already pinpointed specific areas within this large block where they think oil or gas might be trapped. These leads.
How many of those have they identified?
They've mapped out around 40 potential drilling targets, or leads, so far.
40, okay, that's a fair few places to potentially drill.
It's a significant inventory of prospects, yeah.
So with all those targets and these big potential numbers floating around, where are they thinking of starting? Where do they focus first? The source mentioned specific areas.
Right, they basically divide the block into two main zones, the Walton Basin and the Morant Basin.
Okay.
The Walton Basin is often talked about as the low-hanging fruit.
Low-hanging fruit, meaning it's maybe better understood, easier to explore?
Pretty much. It's seen more historical work, more seismic data collected. So geologically, it's better mapped out compared to the Morant Basin, which is, deeper and less explored.
So maybe perceived as a slightly less risky place to kick things off, potentially a higher chance of getting an early success.
That seems to be the thinking. And within Walton, they've really focused on one specific prospect. It's called Colibri.
Colibri. and the potential there.
Gaffney Klein estimates that Colibri alone could hold around 400 million barrels.
400 million barrels
Yeah.
just in that one spot within the easier basin. That itself would be a massive discovery for Jamaica.
Absolutely significant.
But what are the odds? I mean, what's the actual chance of finding oil there in commercial quantities?
Well, Gaffney Klein put the geologic chance of success for Colibri at 19%.
19%. Okay. In frontier exploration, is that good, bad, average?
Well, it's not high, but it's definitely not negligible either. It signals there's a credible geological reason to drill there. And what's interesting is EOG thinks that chance could go up. They say it could rise to maybe 33% depending on the results of some seabed sampling.
Yeah.
They want to do this piston core sampling.
Okay, we'll come back to that sampling. So Walton Basin has these accessible targets like Colibri, potential for hundreds of millions of barrels, with a, let's say, credible chance of success. What are the other area? The Morant Basin.
The Morant Basin is kind of the flip side. Much less explored, real frontier stuff.
Right.
But UOG believes that's where the potential for even larger discoveries might lie. That's where they've given the prospects those memorable James Bond names.
Yes, I saw those. Thunderball, Moonraker, Blofeld. Quite the theme.
Yeah, indeed. And the big one they highlight there is Thunderball. They estimate that prospect could hold over 600 million barrels.
Over 600 million. So potentially bigger than Colibri.
Potentially.
Mm-hmm.
The CEO calls prospects like these the real frontier scale upside. So
Okay.
yes, potentially bigger finds, but almost certainly carrying higher geological risk because, well, we just know less about the geology there.
Got it. So it's like a portfolio. You've got Walton, maybe a bit safer, hundreds of millions potential, then Morant, riskier, but maybe holding even bigger prizes, over 500 million barrels perhaps.
Exactly. Spreading the risk, targeting different types of opportunities.
Okay, these numbers are exciting, potential billions of barrels. But then there's the reality check. Exploration, especially drilling offshore, is incredibly expensive.
That's the elephant in the room. The cost. It's a massive hurdle.
How much are we talking?
UOG estimates they need around $50 million just to drill the first exploration well.
$50 million for one well. And UOG is described as a small independent company.
Precisely. $50 million is a huge amount for a company their size, which immediately tells you why they absolutely need partners.
Right. They can't fund this alone.
No way. Drilling multiple wells, which you'd almost certainly need to do to confirm a discovery and figure out how big it is, costs enormous sums. They're explicit about needing bigger companies. The oil majors like ExxonMobil, Shell, or maybe other large regional players or mid-caps to come in and share that financial risk.
So they're actively shopping this around right now, showing their data.
Yes, that's exactly what Brian Larkin confirmed. They're sharing all their technical work, their geological interpretations with potential partners. He mentioned talks with some regional, some mid-caps, some majors, household names.
So casting a wide net.
Definitely. And he frames that $50 million well cost as a compelling investment case because the potential prize, finding billions of barrels, is just so huge.
Okay, let's flip it. If you're one of those big household name companies, why Jamaica? There are exploration opportunities all over the globe. What makes this one stand out, according to UOG?
They pitch several key advantages. First, the type of target. It's conventional oil and gas.
Conventional meaning, not shale, not requiring fracking, just oil and porous rock.
Exactly, the traditional kind. And importantly, they stress it's a shallow water play. That's a big plus compared to many other frontier areas.
Shallow water. How shallow are we talking?
Water depths in the Walton-Morant block apparently range from about 50 meters down to maybe 2,000 meters.
And how does that compare to, say, Guyana?
Well, some of those big Guyana finds are in much deeper water, often 1,900 meters, sometimes over 3,000 meters, even deeper.
And deeper water means much more complex, much more expensive drilling, right?
Hugely more expensive. That's a critical part of UOG's pitch.
Yeah.
Drilling in Jamaica would be not ultra expensive relative to those deepwater giants.
Yeah.
They also try to spin an ESG angle.
ESG, environmental, social governance.
Yeah. They argue this kind of development could fit into a low-carbon development project profile, helping tick those ESG boxes that are increasingly important for the supermajors, for investment decisions and public perception.
Interesting. Positioning it as maybe less impactful than other offshore projects.
That's part of their sales package.
Yeah.
Technically, beyond water depth, they highlight what they see as strong geology, large structures to trap oil, proof of source rock to generate just a very strong, compelling technical case based on their modern data. And fundamentally, their argument is Jamaica is clearly underexplored, that lack of past success. They say that's actually where the value lies now, because modern tech can unlock what was missed before.
But hang on, you mentioned past efforts. Jamaica has been drilled before, hasn't it? This isn't the first time someone's looked.
That's a really important point. Yes, there's history here. 11 exploration wells were drilled between 1955 and 1982.
And what did they find?
Crucially, those old wells did encounter hydrocarbons. They found signs of oil or gas down there.
So they knew something was there, even back then.
Yes, but, and this is the key part, none of them found commercial volumes. Not enough oil or gas concentrated in one place to make it economic to produce with the technology of the day.
Which leads to the big question, why does UOG think they'll succeed now where others failed decades ago? How do they overcome that history?
Their whole argument hinges on technology. Modern seismic data, how they map the subsurface, and the computer processing and geological modeling techniques are just light years ahead of what was available back in the 60s or 70s.
So they believe their newer, clearer picture of the underground structures gives them a much better shot at hitting the sweet spots.
That's the core belief. Better data, better interpretation, better chance of finding commercial-sized accumulations.
Okay, so where do things stand right now? What's the latest progress, and what should we be watching for next?
Well, a key development was getting that license extension. They secured an extra 2 years for the Walton-Morant block.
So the deadline to drill isn't breathing down their neck quite as hard.
Exactly. The original deadline was January 2026. Now it's pushed back to January 2028. That gives them vital extra time to find that partner and get everything lined up.
And in terms of actual work happening, any physical activity.
The most recent step mentioned is that application to NEPA Jamaica's National Environment and Planning Agency. That was back in May.
And that application was for?
Permission to do that piston core sampling we mentioned earlier.
Right, the seabed sampling. Just remind us what that involves again.
Basically, they push a weighted pipe into the seabed to grab core samples. They then analyze those samples, looking for tiny traces of oil or gas microsieves that might indicate a working petroleum system deeper down.
And UOG sees this as the final technical step before they'd be ready to actually drill a well.
That's how they describe it. The last stage of technical de-risking before drilling, assuming they get the green light from NEPA.
So getting that environmental okay for the sampling is the immediate next hurdle.
Seems like it. It's a key regulatory step. UOG also says they've spent the last year and a half getting their operations ready, lining up technical service companies, preparing everything. They claim they're ready to move very quickly once a partnership deal is struck.
And that deal, that would be a farm-out, right? That's the industry term.
Yes, standard procedure. A farm-out means UOG, holding 100% now, gives away a chunk of their ownership, their equity, to a partner.
And in return?
In return, the partner typically pays for a big chunk, maybe even all, of the expensive exploration drilling costs. That's the trade-off.
And who actually runs the drilling show? The operator. That gets decided in the deal, too.
Exactly. Who takes operatorship would be a key negotiation point. Could be UOG, could be the incoming partner. UOG stresses they're a lean team, ready to get these complex farm-out deals done very quickly once the terms are agreed.
It all circles back to that initial pitch from Brian Larkin, doesn't it? That compelling investment case.
It really does. From their perspective, the potential reward, those billions of barrels, makes the $50 million well risk look attractive. If they can persuade a partner, the odds are good enough.
Yeah.
The clock is definitely ticking towards that January 2028 deadline now. These next couple of years are absolutely critical. Will they turn that compelling case into actual drilling? That's the big question.
Okay, so let's try and wrap this up for you, the listener. We've seen how United Oil and Gas is painting this picture of, well, massive potential off Jamaica's south coast, the Walton-Morant block.
Yeah, highlighting certified potential of 2.4 billion barrels, but suggesting it could be up to 7 billion internally. And constantly drawing that comparison to the game-changing finds in Guyana and Namibia.
They've identified around 40 potential spots to drill. Specific prospects like Colibri in the Walton Basin, maybe 400 million barrels. Chance of success maybe hitting 33% eventually.
And then bigger, riskier targets like Thunderball in the Morant Basin, maybe over 600 million barrels, representing that real frontier upside.
But the big challenge is money. That $50 million price tag for the first well means UOG absolutely needs partners. They're pitching this to majors and others as a compelling shallow water chance with good geology.
Despite Jamaica's history of exploration finding some oil, but never commercial amounts before, they argue modern tech changes the game.
And right now they've got more time thanks to a license extension to 2028, and they're waiting on environmental approval for that final pre-drilling step, the seabed sampling.
It's definitely a high-stakes situation. Potentially enormous rewards, but very real financial and geological risks.
Which leaves us with a final thought for you to chew on. Considering that history in Jamaica finding hints of oil but never hitting the jackpot, and considering the stated odds, like Calibri's 19% potentially rising to 33%, which still means it's more likely not to work, and just the general boom or bust nature of frontier exploration.
Yet what factors, really, beyond just the headline potential barrel numbers that UOG is pushing, what might be the absolute make-or-break factors for a major oil company deciding whether Jamaica is truly the next big thing worth betting millions on, or if it still looks like too much of a long shot compared to other places they could invest?